What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an IMBI technicals update. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could join our cab, a trading community. With that said, let's begin. Okay, you guys, so we are still within our broadening descending wedge that we've been actually tracking for a couple months now. We're looking at the 8-hour chart right here, and we're looking at some rejection from this resistance range that we were talking about, comprised of the knot 236 Fibonacci ratio and the knot 382 at about 56 cents. So we actually attempted to break into this resistance zone and have failed it since. And this is likely due to the anticipation of the FOMC meet tomorrow, you guys. So it is important for us to be able to consider the possibilities within this right here, you guys. So now, if this price structure is actually suggesting a continuation to the downside, and it looks like we do have a bit of a gap still that we haven't solidified just yet, and it was almost closed off. Let's just go ahead and draw a box right over here so you can see. It's actually from this candle right over here to this one right over here. So this is 47, yeah, about 46.98 to about 47.29. We still have a little more to go. Excuse me, so that we can be able to close that gap, and I could see us potentially using the zero fib right over here at about 45 cents before a bounce and trying to continue to the upside. So let's look at the next chart and see what we got. Okay, so we did notice a falling wedge structure within the 4-hour formation right over here, and this is actually a bullish statement for IMBI. We have broken out. Excuse me. I don't know what's going on with my throat. So we have broken out of the wedge, and the breakout did happen at about 70%, which is typical for these triangles to realize. And it looks like we are now coming back to test our newly converted resistance into support. And this is actually backing our downside thesis of potentially testing the let's see, 45.81, which is in confluence with what we were talking about in the previous chart. And also the zero fib right at about 45 cents right over here, you guys. So we do have a support at the knot 236 at 47.09, and this is likely to find it right down here, you guys, before a continuation to the upside. These triangles do have a price objective for us to review. So we take a trend line from the hypotenuse of the triangle to the lowest point of the triangle, and let me just go ahead and straighten it out, and then we can take it to the point of breakout. So this is actually not the point of breakout. We failed it and then reclaimed it once again. So potentially our breakout could be from here. So now we have an objective target at about 72.91. So there's going to be 73 cents, which is dangerously close to our 3618 golden ratio and our 2618 golden ratio. This moving average is the 100-day simple moving average, which can also be used as a form of resistance, and also we can actually reverse back into testing our 2-spot 618 for a continuation to the upside. This can be a form of support. Now, if we take a look at let me draw a trend line right at the top of this price objective right over here, and as you can see, let me just make a quick adjustment right here. There we go. Now, as you can see, it's right at these candle highs. So it's really interesting that we would get the price objective to land at precisely these levels right over here, you guys. You can also see that we used it as support right there as well. So I am still bullish on IMBI, but tomorrow's session could present some downside action for possibly the entirety of the session, so that we can test this triangle newly converted resistance into support before a continuation to the upside, you guys. We do have a couple stops on the way up. This is going to be our 30-day exponential moving average, followed by our 50-day simple moving average. We are likely to come to this area first, which is in line with our 1-spot 618 golden ratio, which is definitely nature's best right here. So that's about 59 cents where we can see the 50-day simple moving average in accordance with. So this is likely an area where we can test after the FOMC meet. If there is an impulsive move to the upside, it could be tomorrow, but if they do give us a 50 bip rate hike, we can rally. But I don't see that happening, you guys. I honestly think it's going to be a 75, but it's not our job to guess. It's our job to prepare for the outcome, right? So I'm not a financial advisor. Please take whatever I do say within these videos as a form of entertainment. Do your own DD and we'll be okay, right? So I do not suggest entry just yet, you guys. And if there was an entry presented tomorrow, it would be possibly within the 45-cent range to the 40. I'd say 45-cent range would be a good area to start. So 45. Let's see. Yeah, from 46 to 45 cents is a good area to start averaging in for a long position. Yeah, we can be long this stock and make some gains. This area right here could be a take profit zone followed by runners to take it to the price objective and the SMA 100, potentially our 3.618. Now let's move on to the next chart and get some bias and direction. Okay, you guys. So 30-minute time frame is suggesting upside, but please notice that it's sitting in the shallow areas of the bear weakness percentile. New listeners, please notice that I have this RSI split into two sections. This bottom half is the bearish control zone. Upper half is the bullish control zone, and both zones are split into two. The inner zones are the weakness percentile of either the bears and of both the bear and the bulls, right? And the outer zones, that's the strength percentile. So we have bull strength and bear strength right down here. Okay, so we are looking at an immediate short-term upside, but we can actually use the moving average to a continuation to the downside. Now, because it is on both of these areas, it could indicate some sideways trading, and it's likely due to the economic catalyst phase we're facing tomorrow. Okay, so now the buy hourly is suggesting a downside, and it's getting dangerously close to the deeper ends of the bear weakness percentile. This means that we can be gravitated towards the bear strength. Moving average is above us, which is bearish. Let's look at the 4-hour. 4 hours also suggesting a downside continuation and also has made a cross, a bearish cross. The moving average is now below us, you guys. So consider that this is all in accordance to what we're talking about based on raw price action for a continuation to the downside, likely to test that the triangle newly converted resistance into support. Now let's go to a higher term. This is the 6-hour suggesting a continuation to the downside. It has made a bearish cross of the moving average and it is now at the border of the weakness and strength percentile. This is likely to enter the strength percentile here, you guys. So this is our larger term time frame. We're looking at a daily within bear strength right here, you guys. So this is we are likely to see a red day for IMBI tomorrow, and I could potentially see. It's like I said, guys, some entries within these areas right down here for a long position, you guys. We are still in the process of confirming and validating, and I said and validating, not invalidating. Sorry, you guys. So we're still in the process of the validation of this newly converted resistance into support. So I think this is a pretty good place for me to leave the video, you guys. If you do have any questions or concerns, please don't hesitate to reach out to me on Twitter, on Discord, join the ARCa trading community. I'll leave the information and the links in the description below. Yeah, I think that's all I have to say. So I wish you well, and I'll catch you mañana at the bell. Adios.